In this video, we are going to talk about dividend stocks to buy and hold forever. So before we start this video, please like this video and subscribe to this channel for our future updates. The stock market is always fraught with uncertainty, but in 2022, this will be especially true because we'll be facing disruptions brought on by inflation in the cost of commodities, rising interest rates, and the possibilities of a broader economic slump. Even though there is no such thing as a sure thing on Wall Street in the short term, there are ways for long-term investors to limit the volatility of their portfolio by pursuing high-quality stocks that have a track record of stability. One of these ways is to diversify their holdings across multiple industries. The 8 dividend stocks listed below could experience fluctuations in their share prices over the course of a short period of time. Nonetheless, they are resilient investments because they pay out dividends at a rate of 3% and are backed by companies with solid, long-term prospects. Unless otherwise specified, dividends are determined by taking an average over the preceding 12 months. Here are the 8 best dividend stocks to buy and hold forever. Number 8, Alexandria Real Estate Equities Inc. In the United States, Alexandria is one of the earliest operators of specialized research campuses in the fields of life science and technology. It is organized as a real estate investment trust, and its primary focus is on areas that it refers to as innovative clusters, which are typically located in close proximity to prestigious academic institutions and metropolitan talent hubs. It has around 50 million square feet of space in prime locations all over the country, including San Francisco, Boston, New York, and Seattle, amongst others. Because of this, its stock is in a better position to withstand more cyclical real estate investments that are dependent on consumer spending. In addition to this, it protects it against the changes in commercial real estate trends that have been caused by the rise of telecommuting for white-collar jobs. Its long-term potential for dividend growth is demonstrated by the fact that dividends have increased from 51 cents quarterly in 2021 to $1.18 at the present time, representing a surge of 130% over the course of the past 10 years. Number 7, Campbell Soup Co. Campbell produces a wide variety of other well-known consumer products, in addition to its namesake soups, such as V8 Drinks, Pepperidge Farm Baked Foods, Snyder's Pretzels, and Pop's Secret Popcorn. The business was established in 1869, and during many different sorts of economic upheavals, it has demonstrated that it is resilient. In the end, it doesn't matter how bad things are for the overall stock market or for consumer spending. The reality that we all have to eat won't change no matter what. The stock of Campbell Soup Company has been able to offer a moderate rise in 2022 through July 25th, thanks to a flight of stable, risk-off stocks like this one. It is anticipated that the stock will continue to provide steady returns for many years to come. Number 6, Amcor plc. Have you never heard of Amcor before? The moment may have come to educate yourself on this dividend investment with low risk and a long-term outlook. Amcor is a corporation that specializes in the production of various types of packaging, including pouches, containers, cans, bottles, and jars. The work is not particularly exciting, but it is unavoidable given the diverse range of industries in which the company's products are used, such as the beverage industry, the medical industry, the personal care industry, and others. This makes it possible to have a broad consumer base, which results in moderate but steady growth over the course of the long haul. For example, it is a dividend aristocrat, which means that the company has increased the amount of money it pays out to shareholders at least once every year for the past 25 years in a row, demonstrating a commitment to the shareholders over the long term. Number 5, Cardinal Health Inc. Cardinal Health is a stock that has a low level of risk that provides goods and services to establishments that are involved in the provision of medical care, such as medical offices, nursing homes, and surgery centers. This includes the provisions of medical supplies, lab items, personal protective equipment, bandages, and other needs that may not have enormous profit margins, but unquestionably satisfy an enormous need. Because of this $15 billion healthcare player has been able to maintain a steady revenue stream, which has resulted in 35 years' worth of straight dividend increases. It is a stock that should be purchased and kept for the foreseeable future due to the company's extensive partnerships with healthcare facilities and its business model, which does not run the risk of being disrupted by treatments or technologies of the next generation. Number 4. Consolidated Edison Inc. It may not be the most popular utility stock on the market, but it outperforms many of its competitors when it comes to its ability to maintain its value over the long run. It provides natural gas to an additional 1.1 million consumers and distributes electricity to about 3.5 million people in the metropolitan area of New York City. Even while the demand for energy in some parts of the country may be more volatile than in others, this client base is not subject to change. It is not only one of the oldest publicly listed utilities in the United States, but it also has a track record of increasing its dividend payments to stockholders at least once every year for the past 48 years. It's possible that there are other stocks in the industry that offer higher yields or have larger market capitalization, but it is the kind of stock that you might want to buy and own for the rest of your life. Number 3. Merck & Co. Inc. Even while the rest of Wall Street has been struggling, Merck has been one of the best performers so far in 2022, with gains of more than 15% as of July 25th. Nevertheless, this company from Big Pharma isn't just looking fantastic in the near term. It also has considerable long-term potential, so investors shouldn't overlook it. The cancer immunotherapy Keytruda and the diabetic medication Januvia are both part of the portfolio of multi-billion-dollar blockbusters that Merck possesses. In addition to this, it is currently negotiating a $40 billion deal to purchase Seagen Inc., a cancer biotech company based in Seattle, in order to further drive its expansion. There is an excellent track record of dividend growth for patient, long-term investors who hang on to this stock because the dividend has increased from approximately 40 cents per share each quarter in 2012 to 69 cents, and the payout has continued to rise since then. Number 2. Unum Group. Despite having its headquarters in Tennessee, the multinational insurance and benefits provider Unum provides services not only in the United States, but also in the United Kingdom and Poland. The majority of the business's focus is on providing group, disability, life, dental, and vision insurance to businesses for the purpose of benefiting their workforce. Since the company's inception in 1848, Unum has been able to accumulate a wealth of experience in this field, making it not only an extremely secure industry, but also one in which it excels. The dividend distribution just edged up 10% to 33 cents per share, which is almost 3 times the 13 cents per share that it was paid out in 2012. When it comes to a holding that you intend to keep for the long term, dividend growth of this kind is exactly what you should be looking for. Number 1. Altria Group Inc. Tobacco brands such as Marlboro cigarettes, Black & Mild pipe and cigar goods, and smokeless tobacco brands such as Copenhagen and Skoal are all manufactured by Altria. Although these goods aren't exactly great for your health, customers aren't exactly in the dark when it comes to the dangers of tobacco, because studies on the subject have been published for decades. And, from an investment point of view, it has maintained its track record of delivering consistent, low-risk returns for a number of years, including an exceptional history of more than 50 dividend increases over the course of the last 50 years. Recent difficulties with the company's investment in Juul, a maker of electronic cigarettes, have resulted in a drop in the stock price. However, the company's solid management and solid balance sheet may imply that the current pullback represents an excellent opportunity for a long-term investment in a stock that has staying power. What do you think of our video? Let me know in the comments section below. If you enjoyed this video and want to hear from me again, be sure to hit that subscribe button before you go. Thank you so much for watching.